Hi folks, David Waring here again with InformedTrades.com and today's lesson of the day. In our last lesson we finished up our discussion on the different styles of trading with a look at a longer term style of trading known as position trading. In today's lesson we're going to start a new discussion on one of the trader's most powerful tools, which is known as the trading journal. So let's get started.
As I think most people who are successful at anything will tell you, a major factor that separates the successful from the unsuccessful is that those who are successful look at each experience as a chance to learn and grow, where those who are not move from one experience to another without learning much at all. With this in mind, one of the major things that separates the profitable trader from the unprofitable trader is an openness to learning from each trade and a willingness to put in the effort it takes to document and periodically review each trade that is made. Traders who document their trades do so in trading journals. This can be as simple as writing down certain details of your trades in a notebook or Word document. However, those who know a bit about Excel normally find this a much more powerful option. Here are 10 things that, in my opinion, it is important to document about each trade so that you have a well-documented picture of what was going on for each trade that was made, and then can go back and look through your journal and address areas where you're weak and leverage areas where you are strong. Number one is the market conditions at the time the trade was made. And this is, for example, is there a lot of volatility in the market? Is the market trading lower or higher, ranging or trending? These types of things. So you want to have a picture of what was going on in the market when you placed your trade. Number two is the entry reason, the time and price. And obviously, if you don't have a well-documented reason for entering a trade, then you shouldn't probably be in that trade. As well, writing down that reason will allow you to go back and see, if over time a pattern develops of success with your entry, with your reasons for entries, or a pattern of failure develops there, and where you can address those things. Same thing goes for the exit. So exit reason, time, and price. Number four, whether it was a long or short trade, and this is something that you can go back and look at and see whether you're trading better from the long or short side of the market, whether your strategy works better from the long or short side of the market, and address potential areas of strengths or weaknesses there. Number five is conditions during the trade. So things like, what happened with the market from the time you opened the trade to the time that you closed it. Did the market, initially rip against you and then bounce back? Could you have gotten a better entry point? These types of things. Number six is money management. So this is, if you've been following our lessons up to this point, we've had several lessons on position sizing and money management, which are on the free course page at InformedTrades.com or in my channel on YouTube if you haven't caught those yet. But definitely you want to document those there as well, so you can see if your money management strategy is working for you, causing problems for you there. Number seven is a attachment of a chart. A lot of traders will include their analysis, so a screenshot of the chart with their indicators and support and resistance levels, etc., on there for the trade to help have a picture of what was going on at the time. Number eight is that day's weaknesses. So anything you're having problems with that day, were you distracted? Did you have to run a bunch of errands that messed you up and caused you to miss a few trades? Those types of things. So those can be addressed, or any patterns of weaknesses will start to show up over time there. That day's strengths. So anything where you're really focused that day, anything that was particularly stood out in your mind of what you did well that day, so you can recognize patterns there and try and repeat and reinforce the things that you're doing well. And then number 10 is just any other thoughts that you feel may be relevant and worth noting in the journal, which will help you when you go back and review it. To look for things where you can improve and things that you want to make sure you are reinforcing that you're doing well. Okay, so that's our lesson for today. In tomorrow's lesson, we're going to look at the next and equally important step of how to go about reviewing your trading journal periodically in order to make sure that you leverage your journal to improve your trading. Okay, so we hope to see you in that lesson. As always, if you have any questions or comments, please feel free to leave them in the comment section below. And good luck with your trading.